Let's now focus on a metal company. The management at Vardhman Special Steel is with us. Sachit Jain, Vice Chairman and Managing Director of the company. Thank you so much, Sachin, for taking out time for us. Domestic hot rolled cold steel prices have risen by about 10 to 15% YTD so far. Given the surge in the prices, how have billet and hot rolled pricing trend been?
Prices have risen and then they corrected a bit in the last 2 quarters. And as of now, because costs have risen again, so we are expecting a price increase from 1st April. And we have sent out letters to all our customers asking for a price increase from 1st of April.
Right. So can you just give us some demand trend, how things are moving on the basis of HRC? What is the general pricing trend that you tend to see, or the lag that you tend to see?
We don't compare us with HRC. HRC works on a different momentum. It's a market-based product, which is spot price linked. It's a commodity. Ours is a negotiated price settlement, so it works differently.
Okay, and Mr. Jain, this is Vinny joining us as well. In terms of margins also, they have been in the 9 to 11% band for the last 5 quarters. Now, given the surge in the billet and bar prices, how much margin expansion would one actually expect to see or foresee in the first half of FY24 then?
Yeah, so first of all, in our company, we don't look at margin percentages, we look at absolute margin. And EBITDA margin, our guidance is we would be between 7 to 10,000 rupees EBITDA per ton. And we expect to be within that range for this year also.
Sachit, when we just look at the markets that you operate in, a lot of markets are very vulnerable to what's happening globally for the last 1 year, whether you talk about the European markets, talk about the Russian markets, you talk about some of the APAC region. Can you just give us a sense, has anything changed in terms of your clients, or ordering activity, supply activity is absolutely normal?
Everything is normal for us at present. And one thing which is changing, of course, is our exports to Southeast Asia, thanks to our Toyota approval. Those are going to be gradually increasing every quarter. So it's slowly going to increase. In the next 3 years, it will hit about 30,000 tons per year. Last year, it was less than 10,000 rupees per ton. 10,000 tons, less than 10,000 tons.
Also, just talk to us about in terms of, your key focus areas have been mainly supplying steel bars to the automotive application. So how is the demand in that automotive sector that you're seeing?
Demand is fine. Two-wheelers is a little weak. But overall, demand situation, we are fine. And this year is a year of consolidation for us. So even if demand peters out a little bit, it doesn't affect us too much because we are not pushing for a big increase in sales this year. As last year, we had a big increase from 173,000 tons to about 200,000 tons. So big increase last year. On top of that, this year, we're not looking for a major increase.
Right. So just a word, all the companies are moving towards value-added product. You, of course, are specialty players. How are you continuing to add value? And, when you move ahead, what happens to margins that you just told us in absolute EBITDA term?
So we are increasing our share of cars, and cars are more value-added than two-wheelers, are more value-added and more special than for the heavy commercial vehicles, and more value-added than tractors. That's the hierarchy. So currently, cars are about 38% of our sales, roughly. And we would be expecting in the next couple of years to go up to about 45%, maybe even 50% of our sales.
Okay, Mr. Jain, thank you so much for joining in with us this afternoon on Markets Unknown, giving us an understanding about the company, the demand trends there as well.
Thank you.